Hello and good morning, everybody. Hi, my name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Monday, ladies and gentlemen. Right, I have one phrase for you. What comes up must come down, right? Eventually. Well, this is what we're seeing right now in metals. Look, I talked about this for a long time now, and I think that I wasn't the only one. But hey, we're seeing a very major reversal. Let's see how this is going to play out further, and let's dig into the markets. I'll see you in a bit. Alright, ladies and gentlemen, hello and good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today, ladies and gentlemen, is Monday. It is a very exciting Monday, of course, not to mention that it's first trading day of February, the official trading day of February. But also, yeah, the markets are going crazy as always. We're having metals, falling off the cliff, continuing to fall off the cliff, to be honest. And for now, like I said, everything is in this on these shaky grounds that we're trying to get our heads around it. So let's see what's happening. So before we go any further, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. Oh, by the way, I'm going to put my usual good morning in the chat room. Good morning, everyone, ladies and gentlemen. There we go. Yes. So, okay. What can I say? Also, yes, of course, before we go any further, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, let's have a look at the economic calendar. Let me just refresh this one because it will be an interesting week in general, like from the economic data perspective, because last week we saw relatively calmish, I would say, market in terms of economic data. Sorry, not the market. The market was crazy. No, the economic calendar. We saw we had the BOC, we had the Fed, but it wasn't that excitement that we were expecting to get from there, especially the Fed. The press conference was a bit of a snooze fest because, again, Jerome Powell didn't want to go into the whole subpoena by the Department of Justice. So, yeah. Now, this week, now let me just go through the economic calendar. We had some data already a little bit, a few pieces of information like the S&P Global Manufacturing PMI from Japan, rating dog manufacturing PMI from China. So as expected, came out better than the previous, but the fact is that it's very close to 50. So in a way, it's still in expansion territory. That's great, but the fact that it's very close to 50, that's kind of what's making everybody worried just by a little bit. Now, look, we're going to go further in a way. Further today, we're getting the manufacturing PMIs from the European Union, Germany as an individual country as well. The same story for the US and Canada. So yeah, a lot of PMI in numbers coming out this week. Watch out for that. So today, yes, ISM manufacturing PMI is coming out as well. So that one's expected to improve a little bit from the previous 47.9 to the 48.3. So let's see how this is going to play out here. But then going further into Tuesday. From the Asian session, the only thing which needs to be monitored, I think that's the RBA interest rate decision. Now we are expecting to see a rate hike, ladies and gentlemen. I think that Australia does understand what they're doing, which is going to be very interesting to see if they actually proceed with this hike, and if they do, well, we could maybe see Australian dollar actually strengthening even more. Again, theoretically. In practice, we'll see what's going to happen. Maybe we'll, we're expecting that rate hike. So, and we have seen Australian dollar strengthening, kind of throughout this time already. So maybe, the actual interest rate hike will, maybe the Australian dollar will actually drop lower just because it has already been priced in. So, yeah, tell me something new, right? So, and also the weakness of the US dollar, all that kind of helped out, and all that, helped build this positivity in the Australian dollar. So, look, long story short, for now, I would say keep your eyes on this. Again, like I said, wait for the news, but don't be surprised, for example, if suddenly AUD kind of drops against its major counterparts, just because, like I said, maybe this up move has been already priced in. So yeah, going further into the U.S. session, we're going to get JOLTS job openings. So basically, you understand that if we're getting JOLTS on Tuesday, that means on Wednesday we're going to get the ADP, and on Friday we're going to get the NFP. But I'll jump into that in a bit. New Zealand unemployment numbers, of course, New Zealand job numbers are coming out as well on late Tuesday, so almost kind of hitting. It depends on where you are, of course, but kind of in between Tuesday and Wednesday. So you're gonna find New Zealand dollar numbers. New Zealand job numbers in there. Wednesday, so yes, Australia S&P Global Composite Services PMIs coming out. So yes, Japan, the same story. China, similar, the same. So a lot of PMIs, like I said, a lot of data this week. Germany composite services PMIs as well. Only the HCOB, European Union, United Kingdom as well. S&P Global Composite Services PMIs. So yeah, there's like a lot of data. We're getting a European Union inflation number. That's going to be. Oh, by the way, yes, that's going to be the estimates, but still a good guide where the economy could go. Now, look, going further, ADP, yes. On Wednesday, of course, we're going to get the ADP. This is going to be the January number, so we are expecting kind of the number to be around the same. But look, this might change. However, I think that this is where what we're watching now. A number which is lower than this, of course, could just kind of prove that there is a problem. There is a problem in the labor market, and it needs to be addressed. But of course, at the moment, nobody cares because everybody's busy with geopolitics. Everybody's busy with the tech companies, which, by the way, are a little bit interesting at this point. We saw Jensen Huang coming out with a statement saying that they're not really way too invested into this whole AI thing. So he's like, blows my mind, honestly. But again, I talked about this in my previous sessions a lot, because I said, look, all this cannot just continuously go like this. And I think that what they're trying to do is, like, I think that what NVIDIA is trying to do right now is just trying to kind of stay away from all this a little bit, because I think that bad publicity is creeping up. Of course, there's no such thing as bad publicity, right? But certainly the image, it matters. So the way it's gonna get, perceived by the public, because we know that all these big tech companies are way too over invested into OpenAI as well, and yeah, it's a big issue. So look, long story short, for now, like I said, keep your eyes on what's happening. We do have earnings this week, but I'll talk about that when I'll jump into the U.S. indices. But yeah, coming back to the ADP numbers here, yes, we are expecting the numbers similar to the previous figures. So hey, let's see how far, how much it will deviate from the forecast and the previous figure. So yeah, Canada and the US S&P Global Composite and Services PMIs are coming out. Keep that in mind. ISM services are also, so basically a lot of data, PMI data coming out. So keep that in mind. This, like I said, these could be these market movers. So then we're going into Australia trade balance. There we go. Boom. We're expecting a higher trade balance. So let's see if that's going to be the case. Germany factory orders, construction PMIs from Germany and the European Union. S&P. Then it's the United Kingdom construction PMI as well. But of course, the Thursday's kind of crown will be taken by two central banks. Actually, they'll have to share one crown. It's going to be the BOE and it's going to be the ECB. So first is going to be the crown will fall on the BOE. They're delivering their interest rate. They're not expecting to do anything here. 3.75 is the rate that they're going to keep. But certainly the voting, that's what's going to matter, because at the moment what we're seeing here is the forecast is that there are less people who want to go for a cut, and there are more people who want to keep the rates unchanged. Now, of course, we'll see what the actual figures will be, what the actual votes will be. But the fact that there is such a kind of prognosis, forecast that that there is going to be a drop from 5 people to 2 people, members who are in favor of the cut, and that tells you something, because I think that slowly everybody will start worrying about inflation, because this is something that we talked about, we picked up on this, and we said that inflation is going to be a problem eventually. Maybe not now, but certainly at some point it will be. So I think they all understand that, and they all kind of think about that. So long story short, for now, we are looking at what they're going to say during the during the report. I mean, how basically the numbers will come out. This is what we're looking at now. ECB 2.15. Yeah, these guys are not going to move the rate below 2. Honestly, I think that it's fine for them. Like it's not something that's needed, and I think that on the contrary, they will start maybe considering and shifting their views towards maybe hiking at some point. But I think that at the moment, just a second, let me just double check. What's the situation with inflation in the Eurozone? 1.9. So look, the 1.9, of course, is below target of 2%. However, still good, still okay, still fine. Look, the next number is going to be on the 4th of that's the flash, sorry. So yeah, we'll keep an eye on the flash. Actually, this is something that you need to, this is the day before, on Thursday. This is the one that I was talking about. So where's that? There we go. It's the inflation rate year-on-year flash. So we are expecting a 1.7, so basically a further drop. But like I said, in a way, you could say that the ECB should be cutting there then, because the inflation is kind of dropping very quickly. I would say it this way. I think at the moment they know what they're doing, and I think that they're not really they don't want to really overdo it, because if inflation starts dropping below, let's say 1%, yeah, then you need to kind of maybe drastically cut again. But at this point, when it's very close, it's just a little bit on the lower side. Is like below the target of 2%. So it's just a little bit below that. So no rush in a way, right? Like I said, unless it's going to start dropping below, like, I don't know, 1%. Okay, maybe 1% would be a little bit drastic, but let's say 1.5. So then they will start, shifting maybe towards a further cut, maybe dropping the rates below 2%. However, I don't think that they want to do that. Anyway, so going further down the line on Thursday, so yes, ECB is the big. The BOC and the ECB are the big banks, which are watched, and of course the ECB press conference. This is something that we'll be keeping a close eye on. Initial and continuous jobless claims from the U.S., of course, as every Thursday should be. Yeah, we'll keep an eye on that. At the moment, the forecast for a bigger amount of initial jobless claims. Jumping into Friday. Now, the Friday will be, I would say, spectacular because, again, there are a few pieces of information coming out here and there, certainly, but the main, the spotlight will fall on the non-farm payrolls. Now, look, I said it before and I'll say it again. The NFPs have lost a little bit their credibility. They're trying to get back on track, of course. The Bureau of Labor and Statistics, all these government shutdowns are not really helpful, I have to say. So, yep. For now, it's well, like I said, we're watching very carefully what's happening. We're watching the situation, with the labor market in overall. I'm looking forward to see what's going to be the unemployment rate because the moment's 4.4, right? But it has been a little bit kind of flat here, I would say, roughly between 4.2, 4.6. It was jumpy a little bit, but I would say this way, if it starts pushing back above 4.6, if it pushes above 4.6 or gets to the 4.6 mark, I think this is where everybody will need to start getting a little bit worried or something, because and maybe, the stock market could eventually shift its attention, towards the fact that this whole AI is, yes, on one hand, in the short run, it's not very good for people, but in the long run, they keep on advocating that this is what's going to help productivity. Look, fair enough. Well, let's see what's going to happen. But as always, I keep on saying that. As always, it seems like that nobody cares about the short run, or on the contrary, sorry, nobody cares about the people. So if you're going to start losing your job, well, everybody will say, well, it's just part of the progress, right? Okay, well, I know it's difficult, but unfortunately, we live in this kind of society. So yeah, going further, after the NFPs, we're going to get the Canada's IV PMIs. Yep, we're keeping an eye on that one. By the way, Canadian job numbers are also coming out. So just, if you're trading Canadian dollar related stuff, then you keep your eyes on that one. And Michigan consumer sentiment, the preliminary numbers are coming out from the US, so keep that in mind. And kind of that's it, well, if it wasn't enough already. But yes, it's a very, very busy week in my opinion. The first week of February, very busy. So let's see how this is going to play out. Ladies and gentlemen, let's jump into the charts. Let's see what's happening. Today we're seeing a sell-off. Why? Because everybody's, like I said, worried about the valuations of these tech giants, because everybody's once again fearful of what's how much they're spending on this whole AI. The fact also that, like I said, Jensen Huang comes out, says that they're not like overspending too much on AI, being the company which started all this thing, in a way, I would say, almost. So okay, OpenAI as well, but they were very vocal about how much they're investing into AI, and this is the future and blah blah blah, which is good. Yes, okay, I get it. But now you're kind of a little bit taking a back seat. So and I think the market is getting fearful, and we're seeing Nikkei dropping heavily. However, still looking at this technical picture, still within the range. So, a long story short, for now, I'm waiting until I can see a clearance. I can see an exit out of this. Out of this little range here, and that range is roughly between the 52,000 kind of 550, 600, and on the lower side, and the 54,000 and a half zone on the upside. So a clearance through one of these areas would be required. Jumping into Shanghai Composite very quickly, there we go, boom to the downside. And what's interesting here is a nice good drop below that 23.6. So everything is looking quite attractive here to the downside, to be honest. Of course, if you've missed it, and you don't want to chase the market, I would suggest not to chase the market, because, well, it's never good to chase. You can get burned very quickly. So yeah, be careful, be cautious, and for now, it's the moment here where we need to see what's going to happen next. Are we going to see a further decline here, or are the markets going to go into turmoil, or is this going to be just a nice little rebound here? Look, either way, 4,000 is the area that I'm watching here in the Shanghai Composite. I said before that, this is one of my good targets. This is a nice 50% retracement from the whole rally here, from the mid-December to the highest point of mid January. So we had this great rally. Now we're retracing almost 50% of it. So let's put it this way. I don't want to rush into things. However, yes, it looks that maybe we could get a little bit of a stalling moment around that 4,000 zone. If that gets cleared, I'll go further south, of course. That's very simple, and then we'll just take it from there. Dow Jones Industrial Average. Let's quickly have a look at this one. So, okay, with the Dow, currently Dow is trading around 48,600. So it's a little bit on the lower side here, and actually is below my breakout point. I talked about it. So I talked about this idea that if we do get outside of the box, and look, we tried a few times to get outside of that box, and we did drop below. However, we failed to stay below it. Now we're just opening below this. So I do believe that maybe a little bit of profit taking here could be seen, or should I say, not the profit taking. I do apologize. No, a little bit of gap filling. That's what a little bit of gap filling could be seen here. But then again, you just keep an eye on this box and keep an eye on this little range where we were previously trading in. If we get back inside of it, maybe we're not really done with the upside. However, if we continue to trade below that 48,782, then there is a chance of a further move south. Let's see what's going to happen here. Long story short, for now, again, we can keep an eye on some of the levels here. The 48,428 is a good target. If we somehow drop below that one, then further declines are possible here. The S&P 500, ladies and gentlemen, the S&P 500 also currently trading a little bit lower, but let me just double check if it's actually within the box here. It's 6,883, so 6,883. So we're just fractionally below, a little bit below this box, and well, in a way, I have to kind of stick to my words and say that if we do break and stay below this hurdle, yeah, it's gonna be more bearish than bullish. So I have to say that, look, if we continue to trade below that 6,900 zone, yep, the downside scenario is not off the table. NASDAQ, also great move here to the downside. On Friday, we dropped below this 25,827, traveled lower, tested this area. The previously, I talked about this area before. This was a good kind of area where it kind of does something. It maybe doesn't respect it all the time, but for sure it occasionally it does respect the boundaries of this kind of wider box. It's kind of like a little pit stop area or something. There we go. We saw a hold up here near the 50-day EMA, near the 25,435 zone. Now the index at the moment is the cash index is trading at around 25,280. So the futures are moving. We're moving a little bit to the downside, today, and we're seeing a little bit of recovery. Don't get me wrong, but at the same time, yes, we're somewhere around here. Basically, we're in this highlighted zone. So I will say this way: as long as we stay below the 50-day EMA, shown as the green line, and we stay below the 25,435, I think there is a chance of a further move lower. I do believe that we could see a little bit of a retracement. However, just like I said, be careful, be cautious, because at the moment everybody's kind of pressing that fear button, and yeah, it's a tricky moment there. It's a tricky moment with the upside, unless of course somebody would say, but everybody's also talking about the great opportunity, because everything has declined, and you can maybe take advantage of the lower prices. True, in a way, true, but it depends. Really depends. I think you just need to keep an eye on the price action right now. It's not as straightforward because we're actually on this brink of either we're gonna fall off the cliff or actually we're gonna just ignore everything what was said and what was done, and then we're just gonna reverse back up. Now look, it's a perfect week to do something crazy because um, because we have a lot of data, right? We have some central banks, we have U.S. job numbers, you know, and also from the geopolitical side, we're waiting to see what's going to happen with U.S. and Iran. Basically, are they gonna do anything with to each other or actually just chill? I hope they're gonna chill because and I hope U.S. is not gonna continue their kind of this colonialism in a way because just going around invading everybody who you want. Well, you know, anyway. Let's jump into the European market DAX, the German index DAX. We're resting nicely on this area here, near this area, this 24,350 zone. So it's providing good support. Now, I am not going to get, although I'm leaning a little bit more towards the downside, to be honest, but I would prefer to wait for this one to kind of make a move outside of this little triangle pattern because look, it's a descending triangle according to all the TA rules. Such patterns tend to break to the downside. However, we need a break here. We need a break of the 24,350 zone. It's not gonna, how to say it, it's not gonna like answer all your, it's not gonna be the answer to all your problems and everything. No, but for now, like I said, it's I'm watching this kind of triangle. It's bearish. It should be bearish. However, let's keep an eye on this 24,350 zone. Let's see what's going to happen here. If we're going to clear it, okay, yeah, I'm going to lean a little bit more towards the downside, but then I will wait for clearance of the 100-day EMA as well. For the upside, well, pretty straightforward. A break of this downside line is needed. Very simple. And then we could target the area around here near the 25,000 zone. I think this is going to be a key area to watch again, because if somehow DAX, let's say, pushes higher but struggles to overcome the 25,000 zone, I think is going to be like seen as a symbolic thing, and people might, investors might think that, okay, maybe we're ready for some down moves. Look, I hope it's not going to end up in a range here. Because again, we know the DAX sometimes likes to range. So I hope this is not going to end up in a range between, like I said, 24,350 and the 25,000 zone. I hope so. I hope not. But, it's DAX. It sometimes happens. The FTSE 100. Also, this one is still stuck in a box and it looks good. It looks interesting. However, yeah, I need something. I need something here. I need a clearance of one of the sides of this box before I could do anything, but at the moment, yep, I'm not getting it. So I'm playing the waiting game. From the indices, DXY, ladies and gentlemen, pushing back inside the box. Look at this. After a brief visit below the lower side, we are moving back inside. Now, looking at this weekly chart, and this is a weekly chart, I want to say that it looks quite bullish, to be honest. However, me being me, and I said it before that I'm not really, a strong believer in the strong dollar yet. I think that I don't want to rush into things. I want to see if we're gonna, drop again. Let's say we fall back down. If we struggle to drop below the 96,000, 96.21 and 22 zone right here. If we struggle, then yeah, maybe a little bit of a rebound back up could be possible. However, like I said, I'm looking at this weekly chart. The prevailing trend is to the downside before entering this range. So it has all the opportunities actually to go lower at some point, but okay, I don't want to jinx it yet. Look, I mean, for now, I'm just observing the price action. Certainly, I'm leaning a little bit more. Maybe it does look like a reversal, a possible reversal. However, I have to be cautious because I think what could happen, I think that throughout the whole week, we could see this one bouncing around here and there, and then once the NFPs come out, those are going to determine where we're going to go next. So just kind of keep that in mind, because we are, like I said, at an interesting spot. We know that on one hand, the U.S. White House administration needs a weaker dollar, better for exports. Also weakening other, weakening competitors from other countries. On the other hand, you cannot really devalue the dollar too much, because it's everybody, or the market participants try to believe in it. It's one of those safe havens when times go rough. It's like I said, you're balancing right now. Which one's going to come first? Is it going to be the whole point of having the U.S. dollar on the stronger side, being the go-to currency during bad times, when the bad times happen, or actually are we going to stick to the plan of devaluing it and kind of making your exports great again? Let's see what's happening in the forex world. Speaking of the dollar and speaking of the dollars, AUDUSD. Now, okay, look, I talked about this. I said that we might see a little bit of a retracement here. There we go. We got the retracement. We got the 38.2. That's fine, but actually I don't like it here anymore. What I want to do is I want to remove all the drawings and start fresh. Now, I'll bring a few lines back up here. I think that this is something that need to mark. So this is the 0.6942 43 zone-ish, and this is the highest point of September of 2024. Also actually the highest point of 2024. So what we're seeing here is that we cleared this hurdle, we stayed above it, but we're currently struggling, or we dropped below it, but we're struggling to stay below that hurdle. If it continues to hold, and we see that the rate doesn't want to drop below this highest point of 2024, I don't see a problem for it to go higher. I really don't. So why not to consider then further upside here? Some of these hurdles. What am I marking here? What's that? No, this is what I'm talking about. 0.7175 ish zone. That's near the highest point of 2023, by the way. Not a bad number, right? Not a bad target. I think it's quite doable. However, I think we need to play the waiting game just a little bit. But certainly, yes, watch out for this. Let's see what's going to happen with this little hurdle here. If we do drop and stay below it, I think, yes, we could see a bit of a larger correction back down. AUDJPY. AUDJPY is still on an up move here. It's trading higher, and it's trading above this upside support line, taken from the lowest point of November. So hey, for now everything's looking quite positive. For now everything's still, like I said, still okay. Risk on looking like, because we know that this pair kind of is our risk on, risk off monitor. But although we're seeing some sort of, like I said, market turmoil, it's really, like I said, it's really interesting to watch this one, because it's not really falling off the cliff. Maybe everything is due to the fact that the Japanese yen is still devaluating. We're not seeing those kind of big interventions into the FX market by the BOJ, although we saw these reports, we saw these statements getting thrown out saying that yes, we will jump in, we will jump in with the intervention. And the same story was from the Fed as well, that because we let's face it, the US doesn't need a way too weak of a yen, because then the BOJ will start hiking rates, and everybody will, and this could just drop the whole carry trade, from which many companies and financial institutions are benefiting, because again, Japanese borrow from cheaper, put it into the West, mainly the US, and we know that the Japanese are one of the top US debt holders. So if that money starts pulling out, as much as the U.S. doesn't want to admit the fact that it's going to hurt them, it will hurt them. So that's why you need a consistent, a slowly like a slowly weakening yen still. Sorry, a slowly strengthening yen. There we go. That's the word. So you always balance. You always balance here, and yeah, we'll see how they will succeed and all that. Going further, Euro USD, of course, the pair will be traded heavily. Look, in general, I'm still sticking to the upside. As long as we stay above the 1.1810, I think that we need to continue targeting the the upside. I think. Look, on a bigger picture here, if I put it in a monthly, we're still below this little downside line. We did test it. We did test this downside line, which is taken from the highest point of 2018. If we break through it, I will go to the upside. If we do stay above it, yes, then we have targets like the 1.23.5 or 1.2555 levels here. Good potential targets, reasonable, doable. Can we go there? Yes, of course, but let's see how the whole dollar situation will unfold, because at the moment, as you can see, DXY is kind of back inside this little box. Yeah, for now, like I said, I don't want to rush into things, of course, but still there is a little part of me that probably wants to see that 1.23.5 or 1.2555 levels. So, Euro GBPY. Okay, look, this one's interesting. This one's interesting purely from the technical perspective. It's still trading above this upside line, which is taken from the lowest point of February of 2025, or should I say the lowest point of 2025. We're still trading above it, but we're very close. It seems like it wants to go lower, but it cannot, well, because it needs to overcome this upside line. So, long story short, if we do break this upside line, I think, yeah, I will go lower. But if we don't, hey, just be cautious, be careful. We might see another push higher. But for the upside, I think that if we somehow climb back up here, if we climb back above the 184.92 or in general 185 zone here, if we climb back above it, then I think there is a chance of a move back up again. Let's jump into, by the way, Euro Aussie. I haven't looked at this one for quite a while. I want to see what's happening here. Very interesting developments here. Great decline, big decline. This worked out like a charm here because I was targeting this 1.7050. So now we're still sitting slightly below it, but hey, I think that the next target here could be somewhere around here, near this 1.68 zone. So this, I think, is a good target as long as we stay below the 1.7050 level. Let's jump into GBPUSD. GBPUSD is also doing similar stuff like what the Euro USD is doing. So I don't really want to overspend my time here. Look, watch the BOE interest rate decision, and I think, yes, that will have its impact on GBP, so keep that in mind. For now, I will say this way, I'll take a very conservative approach on GBPUSD. If we do pop above the 1.3870, I'll go higher, yeah. But if we are looking for some lower levels, I think I'm going to drop below the 1.3568 first, and then I'm going to consider lower levels. So yeah, very wide area for me to kind of wait on, but look, I don't want to rush into things, okay? GBPJPY, similar story as with EUROJPY. So this one has rebounded from this upside line. So I would say that if we do drop eventually again below this upside line, then yeah, I'm going to go lower. But if we somehow climb back above the 213.88 zone, then yes, some higher levels could be met. USDCAD very quickly on this one, rebounded, beautiful, push back up, but we're getting a hold up near this 1.3643 zone. So I think that if you're looking for some lower levels, probably wait for another push back below the 1.3540. If we can get that move, great. I think more sellers here could join in. USDJPY. This one's actually climbed back above the 154.445. So after last week's big decline here, we are recovering some of the losses here. Let's see if we can continue to trade above the 154.45. If that's the case, then I think I'm going to go for a larger V-shaped recovery here. and then we'll just take it from there. If we do fall back below this hurdle, below the 100-day EMA here shown as the blue line as well, then I think that yes, another attempt to go back to this upside line taken from the lowest point of April of 2025 could be possible. USDCHF, or replica of DXY, we're seeing a recovery here a little bit, but again, it's at this point I'm gonna allow it to move around in this wide area, so only when it comes closer to one of these levels that I have here on the chart, 0.78 kind of 29 30 zone on the upside, 0.7605 on the lower side. So yeah, this is what I'm gonna keep an eye on. So for now, it's a very big wide range, so I'm not really comfortable, let's say, doing anything here while it's trading in this territory. Ladies and gentlemen, I mean, as I said, what comes up must come down eventually, right? So gold, look at this, honestly. Like last week, we were just talking about the 5,000, kind of 500, areas. And look at the selling here on Friday. Boom, to the downside. We did recover a lot of, we did, or should I say, the bears recovered a lot. And there we go. Look at this decline here. Amazing decline. We dropped heavily below 5,000. In general, we dropped 1,000 from like Thursday till today. At one point, we dropped more than $1,000 on gold per ounce. Okay, look, this is a big debate right now. That is this actually an opportunity to go in long? Because again, it's still a safe haven, or actually are we going to see a nice move to the downside? Because look, this has been very parabolic. We all know that. I talked several times about this. I said that this needs to be kind of addressed because again, this is not normal. And look, I wouldn't be surprised if we somehow retrace back to the psychological 5,000 level, just for a little bit of a tease. So yep, for now I am keeping an eye on that. At the moment we were seeing, yes, from this morning from around 4,400, a little bit above that, we are seeing this nice retracement back up, and I think it might continue still. Looking at the pace of it, I'm not going to be surprised, like I said, if we see like a push back maybe to the 4,000, kind of 800 almost. So yeah, we're for now we're seeing this exactly. So honestly, it's becoming really difficult to find some sort of logic in all these markets. And in general, I look, there are some things that happen, like everybody's now thinking why this happened, why this shift happened, to the downside suddenly. And everybody was talking about like this Kevin Warsh, the new appointee by the White House administration, for the Federal Reserve chair seat after Powell leaves. That could have been the trigger, but it's not the reason. I don't think that that's the reason why this, why we saw such a major drop here in, because I think it's more of a forced liquidation, happening here, because we know that there was some news that in January the CME group were changing some commissions in a way, like the margins, the amount of margins. So basically, from holding commodities, especially precious metals, basically they were changing from a fixed fee to a percentage fee, where if you want to hold those metals, you will, depending on the contract size, that's how much you would need to pay. So in a way, that would require a lot of money for individuals, for investors, and I think that everybody just decided to take their profits, and they were kind of encouraged to close the contract. So this selling happened. So I think I don't want to say anything. I think that the market is ready maybe for a bit of a correction here, especially looking at silver here. Look at this month, look at this daily chart, you know. So this is a monthly. I mean, we're going through history, and I said that we back in 1980 we did that. Back in 2011 we did that. So we're seeing a nice reversal back down. My only problem right now is to understand where, you know, are we going to actually see this one actually correcting back up a little bit, or will we see the February candle, monthly candle, being a positive one? And it's going to be, yeah, it's going to be, like I said, it will be an interesting play here to watch. You know, are we going to see levels like 100 again? Is this it? I think everybody's asking the same question. I'm I would like to see yes. However, judging from the drop here, I'm not going to be surprised if suddenly, you know, we struggle with the upside and we just continue to decline. And I talked about this, and I said that um, in a way we're coming to a new place, a new norm for all these metals, and you know, I just didn't expect this one to be that fast. Well, actually, you know, what am I saying? I mean, it always happens that fast. You know, it's always a crash, a flash crash, and we can actually treat this as a flash crash. So the question is, are we gonna go, let's say, all the way to $50 or something? Maybe, oh, sorry, like I would say 55, $60. That would be quite interesting if it does go there in such a very short period of time. I would say, you know, there maybe we're gonna see something different than we saw in 1980 and 2011, which I was always comparing this move to. Maybe actually we will see something like, you know, maybe another push higher or something, maybe getting closer to the current all-time highs. Maybe, like I said, maybe it's just a thought, you know, because again, at the moment we're resting on this 50-day EMA on the monthly, on the daily chart, sorry, on a daily chart, resting on this 50-day EMA. So if it continues to hold, a little bit of a pushback here could be possible. Like I said, it would be interesting to see this one actually traveling back to the 100 level, but again, it's also there is a problem that the whole tech story is not dying out. So there is still demand for the precious metals, silver inclusive. And that's why there is this kind of little element that of the doubt that maybe we could see a reversal back up here at some point. Look, the month has just started, so what could happen here is we could see, you know, a reversal back up, maybe a push towards that 100 level, struggle to go above it, and then decline again. But I think that yes, at the moment the demand for silver still is there, especially in China, because they're paying a higher premium for buying that 1 ounce of silver. I think it was even all the way up to even 40% at some point or something. So yeah, it's you know, there is still demand if you're paying, let's say, you know, it's priced at 100 and you're still deciding to pay 40% on top from where the price is right now, just to own that metal. That of course shows demand. You know, that shows how popular it is and how it is needed still. Okay, look, the gold silver ratio, boom, there we go. Came very close. Yeah, so basically we tested the 45. Okay, I will take that. We did test the 45, a little bit below that. So beautiful recovery here. So now the question is, if we are going to see this one actually pushing back up here, so expect gold not to fall too much, but silver could fall eventually, you know, so just kind of keep that in mind. Platinum is also, you know, seen drifting lower. We saw this major decline on Friday, started on Thursday, so we are, you know, we saw this beautiful move here lower, testing the 108 EMA, shown as the blue line on the daily chart here, and testing this 1,912 zone. We did climb back above the psychological 2,000, but can we stay above that? Now that's the big question. Palladium, also beautiful decline, great stuff here. Look, it could eventually present itself with a nice opportunity, so let's not, you know, get too panicky. I think, like I said, I think we could be in a slightly different type of of a decline right now. Come in, like I said, especially looking at silver and comparing it to the 1980 and the 2011 moves here. In 2011, by the way, we saw a major decline in that first month. That was the month of May, and then in the next month it declined. But then we actually saw a recovery, and but okay, it failed to recover all the way to the all-time highs. But still, it was a good, interesting result here. So then it sold off. Then it was a good indication that silver is actually struggling to find demand. And there we go, we saw a decline. So I think that maybe we could see something similar, but I don't want to rush it. I think like there is something, excuse me, something is building up for sure. Is it going to be identical to the 2011? At this point, I cannot say. I think that there should be some sort of market manipulation that will make it move in a different way, and maybe we'll actually see another rally here, get people excited to buy, and then maybe sell off or something like that. So let's keep an eye on that. Let's jump into copper. Copper, yes, also declining. Beautiful, very good, very good. Okay, sugar, my beloved sugar. We dropped on Friday, and we're still here. So I will say it this way, we fell below the 14.39. That's great. I talked about this. I said if we do drop below it, I'll go lower towards the 14.05. We're very close. If we clear the 14.05, a forthcoming lower low will be confirmed. WTI oil pushing beautifully to the downside here. I talked about this idea, said, look, if we come closer to this downside line, it could provide resistance, and we could see another decline here. We fell below the 200-day EMA and the 62.59, so in a way everything's pointing a little bit more towards the downside in the short run. So hey, long story short, for now I am leaning a little bit more towards the downside, unless the whole tension between US and Iran escalates. Then yes, then we'll have to revisit the upside scenario. Natural gas. Yep. After a good recovery here on Friday, there we go, drifting lower. Fantastic. Everything is good. Look, if we do fall and stay below this, below the 3.57 territory, I think yes, I'll go further south. Pretty straightforward. Okay, ladies and gentlemen, Bitcoin. Now, look, the crypto world. Yes, I was talking about the downside. There we go. Great stuff here. 74,450. This is something that I was watching before. There we go. We got the move. We got the test. So my question is, can we go below this lowest point of 2025? This was the lowest point of 25, by the way. So if we can drop below that, yes, further declines are possible here, where we could, aim for areas like around here near the 66,813, 11 zone, or actually 13 zone, 14 zone. This could be a nice good target, but for later. For now, the fact that, like I said, we are testing the 74,458 zone, 56. Yeah, that's looking quite interesting, because we're getting a little bit of a rebound. If we do clear this hurdle now, then yes, okay, I'm going to go lower. But at this point, I think that it's a little bit tricky here. So for now, it's I want to see if we can clear this one. Look, in general, it did drop already quite significantly, and a little bit of buying action could be nice. However, I would say some things, like I said, maybe we're trying to see this crypto world even lower, so that it would become a little bit more attractive later on. So yes, maybe it's way too overpriced, overbought, but I think it will recover at some point for sure. The only thing is that we need to find like strong grounds. At the moment, this could be a strong ground, this hurdle here, the lowest point of 2025. If we stay above it, okay, great. If we fall below it, it's not a problem. It depends on how much we're going to fall. Bitcoin Cash. Now this one is okay. It's beautiful. It's very technical, and so far it's doing a fantastic job here. And it's drifting. You know, it drifted already to the upside, but initially it fell. So in general, it confirmed my target. I talked about this last week. In the beginning of last week, I said, look, we're forming something of a range here. You know, we look at the prevailing trend. The prevailing trend is to the downside, so the greater chance for this one to break out is to the downside. Well, this is what happened. So we dropped fantastically here. Let's see now what's going to happen next, because at the moment, well, ladies and gentlemen, at the moment it is still looking quite bearish, especially as it depends on Bitcoin. I think how that one will behave. If it will continue sliding, then certainly yes, further declines are possible. Ripple also fell, and this is where it's currently resting. It's resting near the lowest point of 2025. Yep, is it? Just a second. 2025 here. Okay, yes. It's resting near almost the lowest point. That's near the lowest point of 2025. Yes, that's correct. It's currently around the 1.58, and I think this is what the market is trying to understand, if we're going to actually drop and stay below the 1.58. I don't want to rush into things. Certainly at this point, I have to say that there is still a chance for a drift lower, but a clearance of that 1.58 zone is needed. Pretty straightforward. Ripple. Ethereum. Again, came very close to that, to 2,114. So now the question is, can we see something like this? Basically similar story everywhere. Can we see a rebound from these key important areas? We had great runs to the downside, so why not to find a little bit of support around here, near the 2,100 low. Ethereum Classic, also a good result here, but certainly the lowest point of 2025 is something that we are all trying to see if it's going to work or not. 8, it's around 8. Still have a bit of room here, so could be the case. Litecoin, my beloved Litecoin, there we go. Beautiful hold up here near this 55 zone, almost 54.95. We're getting a beautiful hold up here, so if we do drop and stay below it, then yes, great. I'll go to the downside. For the upside, a rebound from this 54.95 zone, yes, could be an interesting option here. So if we do rebound from here, I will go higher. Very, very, very much straightforward. Dogecoin. Dogecoin is looking okay. It's near key support, near this 0.1030. So again, the same story. If it's going to clear it. In general, it worked out. I have to say, yes, all these scenarios worked out to the downside here beautifully with my targets. Now the next question is, can we see a further slide here? And if we do fall below that 0.1030, then can we go all the way to that 0.0805 zone right there? And Polkadot is, yeah, okay, so this one's, yeah, it found good support near this 1.4464. That level is, let me show you on the chart here. So this is what I have here. Let me just jump into a monthly. This is kind of when it started in a way. This is like the lowest point of 2020. This is all the data that I have here. So it's yeah, it did test. It's currently testing this area. It's currently testing that hurdle. The question is, can we drop to that 1.17 level ish, because that was this flash crash we saw in October. Okay, so and finally Tron, ladies and gentlemen, finally Tron. There we go. We're seeing a nice movement here. What can I say? Tron is very technical. I like this one very much, but certainly it's showing me willingness that it wants to go further south. 0.2769. That's what I'm going to aim for now on the downside scenario. So long story short, I don't want to rush into things, of course, but certainly yes, this is something that I am watching very carefully. and then we'll just kind of take it from there. So, ladies and gentlemen, that is a wrap. Thank you very much for watching and listening. I'll have to end here. Thank you for all your time, your views, your likes, your comments, everything. I really appreciate that, ladies and gentlemen. So, as always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you on Wednesday. Bye for now.